Hey guys, this is Chris Mancola, and I just wanted to give you guys a quick market update and let you know about some new stuff happening. Again, I want to remind everybody that my wife, Cynthia, got licensed in Florida, so she can now help with any loan stuff in Florida, and we can help you actually with any real estate stuff in any state. But loan brokers kind of things, whether it be refinance, home buyer, home loan, pre-approval, all that good stuff, cash out refi. Florida people, we can help you with that now also in Arizona and Florida. One other thing I want to mention too is we're doing for a couple months, the next couple months, she's able to offer $600 appraisal credit. We're always doing appraisal credits for VA home buyers on their mortgages, but Modern Home Lending is now doing that for the next couple of months. So ask about that. If you're thinking about buying a house, now's the time. Interest rates also ticked up, about a 0.5% from where they were. They were like, high twos, low threes. Now, then they were in mid threes. Now today, the Fed came out and said by March, they're going to raise the rates again. They already told us they were going to be doing this by, 3 to 4 times this year anyway. So figure around March, I would guess it's probably going to be around 0.25%. Hopefully not much more than that. Probably by the end of the year, we'll be running around 4%. And the reason for that, again, is, the way that they're handling the bond market right now. And also inflation is a big, big problem. So it's kind of the cruelest tax right now. But that said, without getting too far into the weeds on that, if you're looking at buying power for interest rates, just to kind of give you a general idea, if you're looking at if you can still find them, a $300,000 house at a 3% rate, and you go up to 3.5%, that same payment at 300,000. If you want that same payment, now that brings you down to $280,000. So it really affects your buying power. So if you're thinking about buying or refinancing, do it now, because it's definitely going to keep going up for the foreseeable future in increments, but it's going to be going up. Now we're still at historic lows. As far as general round numbers are concerned, 3 to 4%, even if we get up to 5%, that's still not horrible, but it does affect buying power. Will it affect the market much? In our market right now, I can say confidently for the next 3 to 6 months, for every indicator that we can see, it's not going to really affect it that much at all. We have over 269 people, if you break it down, the numbers, over 269 people moving here every day still. It's about 97,000 per year. We have record low inventory in most cities. People have super high equity right now because of the low inventory that we've been dealing with for the last really 18 months and last couple of years for the most part. Overall, Phoenix has always kind of been, if you go back to the 80s, kind of been a seller's market, except for a couple of short periods of time. And again, if we're waiting for the numbers to come down and for that bubble to burst here, we're not seeing that anytime soon. I think things will eventually slow a bit once the crazy, all the crazy lockdowns, and people can actually kind of move where they want to move and work where they need to work and make a living and all that. With that, that'll kind of, level things out. Interest rates may affect some first-time home buyers and things like that, but we've got so many people moving here, selling homes, tons of equity to play with, buying second homes even right now. And there's been some changes to those second homes purchases. But, those are things that we're seeing, and it's just super, super high demand. So, and renting isn't any better. Okay. It's actually worse because you're not gaining any equity and you're not locking in your payment. So, this, it already feels like last spring. So, we use a thing I mentioned the last few weeks called the CMI, Crawford Market Index. Basically, that gained 71 points in the last 30 days. Anything over 110 is a seller's market. Anything below a 90 is a buyer's market. So those indicators tell us that, we are still and a very, very low inventory. Prices will continue to rise, like I said, in the next 3 to 6 months. Supply has also gone down. The actual supply coming in has gone down 4.9 points in the last 30 days. Some of the lowest inventory cities are Tempe, Avondale, Goodyear, Surprise, Scottsdale, Paradise Valley, Phoenix, and Queen Creek. So just to kind of sum that up. And in the last month, we've seen that CMI go up 18.7% overall. So right now we're running at 37, on average, 37 closed days on market. Homes that are listed, it takes 37 days to close days on market. We've got a 0.90 month supply. That means we don't even have 1 month supply. So if everything were to sell, over the next less than a month, but nothing came in, which our supply, like I said, is going down, we would have no more homes to sell at all. New home builders are trying to build them as fast as they can. They've got waiting lists, crazy lotteries going on right now. There are a few places that are first come, first serve. We just need to know where they are. I try to keep up on that as best we can for Mincola Group. And our absorption rate is crazy right now. So our average list price is $759,871. And the average sales price, the actual sales price, is $581,044. Now, I remember when not too long ago, when 500,000 was like the luxury market. So these numbers are crazy. List to sales price ratio has actually gone up over the last couple of weeks. That's at 107.72%. Usually we like to see that around 98%. So that has really made a big difference as far as what we're seeing in supply. That's another indicator. Now, again, our economy is strong here. Unemployment's very low. Our economy is growing. People are moving here. Companies keep moving in. Tech companies, all kinds of different companies are moving in. So again, our market's strong, our economy's strong. I'm not worried about any bubble bursting. People have got equity. Supply is low, demand is high, and those are the big differences from the crash from before. And when we go dig into the numbers as far as short sales, foreclosures, pre-foreclosures, all that stuff, it's just non-existent for our market and actually around the country for the most part. If you took the whole country and looked at those numbers. So if we're waiting for some kind of bubble to burst here, we're going to eventually see a slowdown. Our average would normally be around 5 to 6% gains per year in equity. Last year we saw pretty close to about 40% on average for the metropolitan area. Right now, we're kind of heading in that same direction as long as we got enough inventory to burn up and keep having semblance of inventory to burn up. But I would say we might see after another 3 to 6 months to a year, we may see those numbers maybe come from closer to 30-40%. We may see them come down 25-20%, and then maybe the following year maybe 15-10%. But as far as going into like some sort of dip or burst of a bubble here in our housing market, just not any indicator that it's going to happen. So guys, hope that helps. Feel free to reach out with any questions at all. Again, remember, keep an eye on those interest rates. I would say buy sooner rather than later, not just saying that to get a deal done, but to save you guys a lot of money and give you more buying power. Always work with a mortgage broker. My wife and our son, both mortgage brokers in AZ and Florida, here in Arizona and Florida. So they can certainly help you with that, get you the lowest rates, save some money on that appraisal, rebate. And also not charging any junk fees, not charging you any processing underwriting fees. Also, lower compensation plans are a big thing that, not too many people even know about when it comes to what you're getting charged when you go out to refinance or get a loan. So a lot of times they can, beat all the incentives that the new builds will give through their new home office lender. They'll even be able to beat those when you break down the numbers and see what you're paying out. Some of them charge you a ton of money on those new builds. So guys, reach out with questions. We'd love to be able to help you buy or sell a house right now. If you're thinking about buying, now's the time to get out there, or maybe even wait 3 to 6 months, let it kind of build up a little bit more, and then ready to go ahead and busy season around spring, summer, and take full advantage of those market increases. But we can certainly use that inventory, guys. So let us know if you have any questions. We're looking at new builds, resale homes, refis, cash out refis. We're a one-stop shop. Talk to you guys soon. Always reach out 480-788-8569 or MincolaHomes.com and MincolaGroup.com. See you guys next time.